Okay, we're just doing a sound test here, and Creative Babo, you were fourth, not first. You were close. So you guys are hearing me fine, right? Volume is low. Okay. Another sound test. So you still have low volume? All right, let's see if this is sound is better on this screen here. Just let me know if this is working. I'm starting to not like Streamlabs here. I'll have to go back to the old school. You know, I don't get it. I don't change a thing on this setup, and here we are again with crap sound. Hey Jade, let me know what's going on here with the sound, would you? Very bizarre. Okay. Um, yeah, nice comment, Christoph. He knows less than I do. It's not me, trust me, because this thing worked absolutely fine last week, and I haven't changed a thing. Yeah, you do that, Jay. See how that works out. Testing. Yeah, I'm about to go to the headset. I don't want to go to the headset, but it's still very quiet, right?
Testing, testing. I bet that's better now. Let's see if that fixed it on this screen. Testing 1, 2. Okay, folks, this should be good. Yeah, I know where the settings are, Christoph. Don't, you know. I'm not sure why these things set, but it should be better now, right? Loud and clear, just what I thought. Okay.
You guys forget I develop software. Okay. All right. Give me just 1 second, and we'll get started here. Okay, folks? All right. So we should be fine again, right? We're fine, correct? I'm going to check some other. Testing. I didn't touch anything. This thing just, I don't know what's going on. Okay, hang on. I am so sorry. I feel like an idiot here. Testing. 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 Believe it or not, I had the mic working, and all I did was move the mic. So I'm wondering if there's a problem with this mic cord. Testing.
Testing. I bet that really works good. I'm going to the headset, folks. I'm sorry. I have no idea why this thing is doing this. So we're going to go to headset, and that should be fine. Yeah, we haven't seen Gino around, have we? Everybody hearing me fine now? You know, I'm telling you folks, they did an update on this software and it hasn't been the same since. All my settings have been screwed up, so I'm going to blame the software guys. So you guys hear? Yeah, okay, cool. Don't move. Okay, I'm frozen, Monica. So now you can hear me on this screen. I just want to get confirmation on everything so that we're working okay so I can get this thing finally going. This is ridiculous. So No, I don't use. Okay, this is the microphone, $400 microphone that I use, not the headset. That's not what's happening. But anyway, thank you, folks. I apologize again for some technical issues, and this always throws everything off, including I'm not quite ready because I've been screwing with the sound. So I'm going to take 2 minutes. We're going to act like this thing is just starting, and then we're going to go from there. And yeah, I hate wearing this thing for 3 hours is ridiculous. I hate it. So anyway, no, I'm not having a senior moment. You know, I'm very technologically strong. So anyway, it's the software. I hate it. I'm going to go back to the old school OBS because this thing I use the Streamlabs and it just has to go forward. So anyway, yes, we are going to go forward here. Let me check a couple more screens, make sure we have sound on everything, and then we'll. I'm going to go grab a Runa and a water, and then we'll be ready to go. So here we go. Making sure this one should be working fine. Everything looks fine here. Everything looks fine. And just got to test this one. Everything looks fine. I'm going to try something just so I don't have to wear these headsets. How does that work? That works fine, doesn't it? Yeah. Looks like it works fine. Let me know if there's any change in the quality as far as having this. I don't want to wear the headset for 3 hours. It's just too much. Everything's good now, right? Everything's good. Okay. David, appreciate the $5 for the technical assistance. Appreciate it, man. All right, I'm going to go. I'm going to put you on screen here with watching the futures trade, and I'll be back here in just a minute. Thanks again for your patience. Okay, folks, we're finally live, and I appreciate your patience here. So you should be able to hear fine. I haven't been talking, so anyway, a lot going on as always. It is Fed Day. I don't think you guys can tell me if you want to, but I don't want to watch Powell talk today. We'll just see the reaction. I know a lot of you folks, if you'll like give me feedback, what's going on, or if he says anything significant, I'm going to use you guys so I can focus on the analysis and what we need to do here. So, yeah, yeah, it's interesting because this universal income that continues to come out is driving some things. I mean, if you take all the stimulus that you've got and divide it, you know, over a 12-month period, it's really not very much money, right? So I'm not sure that there's a lot of benefit there anyway. So so are we still having sound issues? Is that what you're telling me? Because it looks fine on my side. Yeah, actually, I bought new lights, so thanks. I'm telling you guys, I have touched nothing. And if this sound is going crazy, this is all on Streamlabs. I'm going to put the headset on just because I can't deal with it. So you're going to tell me that's way better. It's pegging out. So I will wear the headsets reluctantly. Reluctantly. So anyway, yeah, so I don't think I want to watch the Fed today. I mean, it's the same story, right? And we'll see what kind of reactions we get, maybe in the conference call. But every time we do that, it just seems really awkward. So I'm not going to do that on Fed Friday. So it's yeah. So like I said, I'll go ahead with the headsets. Don't really want to wear it, but that's what we're dealing with. So I want to talk about a couple things today that I think is important, and it's most likely going to end up to be a theme going forward, and it's going to be talking about the effects of inflation and some of the things that are starting to reveal itself after a year of absolute craziness, and that is going to be the primarily shipping demands and product shifts, things of that sort. And some of this stuff I'm going to talk about has already been evident for a while, but it's interesting how there's no way to get things going. So what we're seeing is we're still seeing some really tight, not just the shipping. I showed you on the video a week before last of the shipping channels, and primarily in Los Angeles and Long Beach, but it's more about just about everything. I talked about we got a snowstorm that came through northern Arizona, which is I-40. So to get to the rest of the United States, you're in some form are going to go through Arizona. Okay, so you got to go I-40 north, which will take all the products up to the northern part, Chicago's and everything up in the northern part. I-10 takes everything down south, and I-10 is where the railroad tracks are. That's the easiest and lowest mountains that you have to get through down in the southern part of the country. So what we're seeing with all of this stuff is just a massive bottleneck. And I talked about it a little bit. When you get through the bottleneck, you then have to get the trucks unloaded and get them to warehouses, and the warehouses are backlogged and everything's stuffing up. And so what we're going to see, and Jay, if you could share, make sure I have like Mack Truck Hauler or something like that, because I'm going to bring up some of the platforms so I can see that and maybe talk about that as we go through this segment. So just share it on my Epoch account. Okay, thanks. So anyway, what we're going to do as we go forward is it's just going to get worse. So more of the country opens up, things get. If we could turn the switch on full tomorrow and everybody was back to work and we were, this thing never happened, it would be a nightmare right now. And you start to see shipping costs and product costs start to go up. I mentioned in the video I did a couple, I guess it's been 2 weekends ago now, is that Peloton spent like $100 million just to ship bikes, trying to unclog their backlog a little bit, and they spent 30 times the shipping costs that they had to spend. And that situation, I think, is going to continue to get worse. And the reason why I talk about this, because this is, I guess, if there's anything that I kind of touched on in last night's video, was the really was what the Fed's going to do about these inflation expectations that start to build. Last time I looked here, let's see here, yeah, 10 years at 1.66. This is a new high. We're up 2.6%. This is prior to the meeting. Maybe it'll come back in, but I'm going to go through that here in a few minutes and talk about the effects here. And I'm an old guy, so in 1974, I was just out of high school. a couple of years, a few years actually, and Nixon was president, and they put in price controls on the economy. So they said you can't raise prices because inflation was really starting to surge at that point in time, and they put price controls on and just froze certain types of goods and things. They just froze them, and so this is, you know, we haven't seen anything like this for a long time. In 1974, we also had gas lines for a mile long, and you could only fill your car on even or odd days depending on what your license plate was, and then you'd wait in line for an hour and only for the gas station to run out of gas, and then you try to go somewhere else and hope you didn't run out of gas before you got some. So we've never seen this tight of a situation for a long time, and so we're seeing the whole world. It's not just the U.S., it's everywhere. You know, if you're in South America or Africa, it's even worse. There's nobody even, I wouldn't say they don't care, but it's a secondary thought. Everything's focused on the major population sources of, places on the planet, mostly in the northern hemisphere, and Europe and the U.S. And so there's just a massive amount of shortages. And I was just doing some field testing on a weekend. I had to go to Best Buy. There's no inventory in any of these Best Buy stores. I needed to buy a printer, and I bought a printer, and the guy said, it'll be lucky if we see another one like that for 6 months, from what I'm hearing. So what's happened is the manufacturers can't keep up. No one can keep up. You start to get these shortages, and you start to see prices start to move. So the Fed can do whatever they want. Okay, the Fed has no control over this, in my opinion. This is something that we've never seen before from the standpoint of the trigger point. We've seen things like this before, but not for the same reason. And what I'm trying to drive at here is when we get into this type of pattern, you have to start to extrapolate out. And I've been pretty good at this over the years. You folks will have to take my word on this, but when I start to see these things, they just start playing out, and there's like domino effect. They keep, one thing triggers another, that triggers another. And the stimulus checks that somebody was asking about on the chat line here just a little bit ago, the stimulus checks aren't going to fix anything. That's just trying to pacify some folks. And as we look at the so-called COVID bill that was passed, 1.9 trillion, I think 9% of it actually is going to those checks. Everything else is being spent on saving these upside down states and other elements out there that are about to blow up. A lot of these states have not funded their pension funds right. I did a special report probably 3 or 4 years ago that I thought this was the train wreck that was on its way, right? So what's happened with this bill is, like it or not, they probably are fixing parts of the financial system that would have broken really bad. In spite of all the rhetoric around this thing, the money that's going to some of these states, if, this is a if, they do with the funds as they're expected to do, will plug a lot of holes and will at least kick the can down the road a little ways before we'll see any, before we'll have even a chance of any major financial crisis. So from that standpoint, there's probably some good out of the 1.9 trillion that will occur from that standpoint. So it's not all stupid. It's not all just a waste of money, even though most likely the same people that screwed up and didn't fund their states properly, whether it's pensions and other elements, are just going to recreate that because there's no consequences for them for what they've already done. So, but this will at least buy some time, and maybe somebody will get a sense of fiscal responsibility. Who knows, right? But I guess this is the element that I think is really important as we start to watch the markets. And we're seeing some some pullback right now. You know, we've got Nasdaq down 1.18%. Probably the hardest thing to do every night is to figure out the thumbnail, and the thumbnail is you know, so everybody's going, oh, you said the Nasdaq's going up and it went down. No, you have to watch the video, not read the thumbnail, right? The video said that the Nasdaq is setting up for higher prices, and it is, and I'll go through that in a minute to show you it's not about the day-to-day, it's about the general theme of what's going on and all of that stuff. So yeah, and Jason, I'm not sure how to pronounce it, Kilnafler. Sorry, I probably really butchered that, right? But that is the other problem, which is the just-in-time inventory method. We saw that blow up last year, right? And that goes to everything that I'm trying to talk about. It takes nothing. Like all of those trucks, there was something like a 35, 40-mile jam up on I-40 because it was closed getting up to Flagstaff. So if you come out of California, it's a steady climb to about 8,000 foot and Flagstaff on I-40. And I mean, it's steady. It's like a 45, it's not quite a 45, 30-degree angle going straight up the mountain to, you know, from a couple thousand feet to 8,000. And it happens in about, I think, 70 or 80 miles. So the point is that all of this disruption that's happening is going to start to reveal itself. And we saw a little bit. I was somewhat surprised going back to last week for a minute. As we get to CPI numbers, it was like, oh, okay, no big deal. But when we got to the PPI, they actually showed this increase, and people responded to it a little bit. We did see interest rates continue to respond to this. And I think one of the things I just want to point out as we go through the Fed day here and talk about relative things that are happening is the action in the 10-year isn't affecting everything as much as you would think, primarily because I think the marketplace has accepted somewhere between a 1.8 and a 2% on the 10-year as that's okay. Anything above 2%, I think it gets really ugly really fast. And one of my biggest concerns, and I'll talk about this in detail here in a minute, we're going to go through the yield curve and talk about interest rates in general. And what my main concern is here is that there could be a spike in yields similar back to the taper tantrum of several years ago where we spike out. And the question is, after those spikes, where do they stabilize after the spike when they pull back? And that is my major concern, because that will start to disrupt other things. Because one of the things that they did I'm kind of back and forth here, but one of the things they did with the stimulus is they passed the stimulus. Now they have to raise the money for it. So that brings me to segment 2 of this opening comment, is that we have price pressures going on through shipping. We have a massive amount of money that's going to have to be borrowed, right? So that's going to be another factor as well. And there's going to be pressure across the board on how many securities are going to be offered, all of these things that are going to happen. So this is segment 2, which is taxation. So now what you're seeing is the administration starting to test. The way this stuff works, and you know, you watch this stuff for as many years as I have, is they float things out in the market and see how it responds. So we'll see what comes out of Powell's mouth, not so much, but our fairy godmother Janet Yellen's running around, and she's the new cheerleader for the government. And so what we're going to see now is they pass the bill. Now they got to pay for it. So how are they going to pay for it? They're going to borrow some money, and they're going to have to tax, and they're going to have to change taxes. You're already seeing going back to probably the capital gains taxes from going on the corporation from 21 to 28, which is rolling back to the Clinton days. And if they could, they'd roll it back to Jimmy Carter days, which would be 1978, and they would put everything at around 60%. That's probably, they're going to push that needle as far as they can until things start to break. That's just an opinion. And so what they're doing now is they're starting to float these ideas out in the marketplace just to see, well, they didn't seem to react to that very much. Maybe then they'll start to take some of these policies and start to put them in place. They'll start to go, okay, we're going to increase this one and this one and this one, see how they like that. And they'll just keep nudging this thing until all of a sudden magically you'll wake up and do things like the Elizabeth Warren's wealth tax. Like it, don't like it. It's just, they're just trying, these are nudges. So, okay, we put that out there. No one really responded much to that, all of that stuff. State of Arizona passed a law, if you make more than 400,000, that there's an extra 3+% on your taxes for your state taxes. All of a sudden, that almost doubles the state taxes for those people here in Arizona. So you're seeing it all types of places everywhere. This is what's going on with taxation, and that's ultimately going to cost money. It's going to be a drag on some parts of the economy. You know, some it won't matter. But those are things we need to watch for as we go forward, because I just, you know, I always say to everyone that taxes matter. And I just want to point out that the market has rallied substantially. So I suspect Powell must be up. We just went positive on the S&P as I'm speaking here. So we went from down 20 to up 5 now. So I suspect that, I suspect that there's something coming out. It's right at 2 o'clock. So I suspect that's something that's happening on. So that was pretty exciting, actually. Let's see here. So whatever was, I don't know if you guys. Thanks, Derek. Appreciate it, man. I really do. Lots of volatility. We went from down 20, up 5, down 3, down 4. Let me put that on screen for a second. I want to watch. There's some pretty good action here real quick. So, see, let's put it over. You'll see it on this page. There's the spike right there. And that was pretty substantial. There's still a bit in there. And and I think the NASDAQ, we'll look at that in a second. NASDAQ was down 150. It was, last I looked, it was like 70, maybe 65. So this is a big pop. Yeah, okay, there you go. Thanks, Mario. Thanks. That's, So projection for unemployment. Steve Weiser, you're right. 400K is the old 40K. You're right. Yeah, so there's something that talked about here, and this is typical. We let me get on live on screen with you, make sure everything's still working. Yeah, so this is pretty typical action. Whenever you see this stuff, if you're a day trader, this is like the ultimate. I've talked about this, I know, on live streams before, but when you see these reactions to news, you can almost always fade them. There's always a good trade there. I mean, you're looking at the high print. If you would have sold into that rally, 39.70 was the high, and we're back at 51 here in 3 minutes. So there used to be always always a situation when I was on the floor in San Francisco. Remember the old brick phone? So I had a brick phone, and I remember talking to the floor as I was on my way into the city, and there's a tunnel. Now the cell phones work in the tunnel, right? But they didn't used to work in the tunnel at that time, so you had a blackout. It's like 2 minutes to go through the tunnel to come into the Bay Area from the East Bay where I was. And so literally would put orders in, and that 2 minutes, this is where I learned this trade. The news would come out. I said, okay, go ahead and sell them. And then I come out the other side and buy them back, or buy them on the dip or whatever. And that trade worked. It was, I called it my BART trade that you could do from, the old brick phone. So it's pretty funny. Anyway, yeah, so now what we're doing here is we're actually setting up Dragon Head on this pattern here, which is typically will resume back to the upside. So here we are, look, we're down 175. We just rallied 8-9 handles, so lots of volatility going on the screen here right now. So there's plenty to look at. So yeah, you guys just not talking. Usually there's lots of activity on the line, so I'm not seeing any movement. So yeah, let's go. I just want to go back to let's go ahead and dig into some of the things that I want to talk about today, and let's start digging into some of these indices here. And one of the things that I have been talking about on the channel, you see that we're getting one of these soft rolls, and even though we're seeing this roll here, one of the things I talked about last night video is PPM1 is really starting to come alive here, and this is on the futures at 0.37. If we flip over to SPX for a second here, you'll see SPX is doing the same thing, where that underlying moving average is starting to move up. And I've been really talking a lot about this from the standpoint of how the configuration is folding. When the fact that we've been making new highs, you don't have to have extreme volatility or momentum to get to new highs. But this is what I've always called the creepy crawler, and it just keeps crawling up and printing new highs. The downside's very limited, and it just kind of stair steps up. The thing that is finally happening, and I mentioned this in the comments last night, is that the deal is that the 10-period moving average is turning up. This is a really positive sign starting to come up. What it's going to do is supply a lot of support in the markets in the current configuration, okay? It doesn't look like it wants to scream off to new highs or anything. As we're just looking here, just kind of watching some of this volatility, the S&P, I'm going to flop back and forth to a couple of screens here. We're stabilizing down at this lower level. This is the dragon head I was telling you that's forming, and it's most likely going to attempt to challenge that 70 level, which is a 10 handle move up here. We should see a re-challenge of that, and the key number is going to be that low at 50. So you got a 20 handle move in 8 minutes, right? So this is typical in this volatility range, and we're getting this thing where it should continue along a slope here, and I suspect there'll be a retest here. We'll keep an eye on that. So let's go ahead and keep looking at some of these. When do Tobias, I'm not sure when we're going to get a buy signal. It's going to take a few more days. One of the things that will have to happen on WaveTech is we got to get this PPM2 to turn up to its first and second derivative. Right now it's its first. PPM3, this has been one of the issues here. Yeah, I think it's Nanya. Yeah, sure, absolutely. Yeah, and that is a good, that is, somebody just made a comment, that if bonds sell off in a big way, doesn't that money have to go somewhere? Absolutely, but it can go to cash temporarily, but it will go somewhere, and that's been one of the things that I've talked about for a lot of years is to, is that is actually our job. If money's coming out of bonds or coming out of somewhere, where's it going to go? It is going to find a home, and I suspect that that will be the case. That it will flow into the markets. I've been talking about the S&P printing up around 4,000. So let's go through right now. I've spent a better part of this first section, unfortunately, screwing around technology. That's not going to happen again. So let's go ahead and let's just do some analysis. We've got SPX up here. Let's go to the next level and let's start to talk about what the expectations are on an intermediate basis. And it's funny, and I don't worry about the trolls, but sometimes the trolls bring in some focus. I will tell you that needs to be talked about, and I think whether they're critical or not critical, it doesn't matter. That critical voice is good to hear. So I don't have a problem with this. I've told you folks before. The only thing, if you call me a crook or a scam artist or something like that, then I'm gonna do it. It's just when you don't call me names. You can disagree with me, and I appreciate. I've seen a number of comments. I try to get through a lot of comments on the channel a lot because they do sometimes bring up some good thoughts on challenges to some of the things that I talk about. And as I've said, this channel, everything I do is supporting our software users, and for many years, for decades, we've been institutional only, and now we're starting to bring in the retail element to our business. And so this is what this is about, just having some perspective, keeping the emotions out of this thing, and not, and try to walk it forward little by little. And in the end, it's always about the signals and things coming out of the models. And that's one of the things that people, I guess, that if you're not coming into the software, we have two levels, the Wave Tech platform, and then there's Portfolio Expert. But this, one of the things that I talk a lot about is, and this has been what I've talked a lot about for decades, is what trends are driving the markets in general. So you're always going to have probably 40 to 60% of the time, the short-term day-to-day stuff is just noise. Trying to figure out the noise sometimes isn't very easy. And then other times it becomes incredibly easy, where it's almost like it's following the script. And then it gets out, then it gets noisy again. And by noise means more randomness. But then as you go through, and this is something that I talked about for many years, is as we look at this weekly SPX chart, what we start to see then, you start to eliminate the noise. So now the bars, we're looking at a 1 week bar and then a 1 month, and we're going to go through that. And the importance of understanding that is you need to understand that at some point you want to eliminate the noise so you can see the broader trends. And once you do that, you actually can actually make money in the markets. The day-to-day noise is brutal. Now we're looking here, look at this. Here we are retesting that 70 level on the futures here. We're 68. It might have even printed it. I haven't been watching it tick by tick, but we're looking at SPX now up 6 on the day. We're looking at NASDAQ about to go positive right here, right? So it just went, NASDAQ futures just printed, just went green. So we're seeing a complete turnaround. It'll be interesting when we go back and start to dig into what the Fed said, and I'll cover that tonight. Yeah. So we're going to go through typical here, Fabian. We go and we do. we're going to do the markets, we're going to do interest rates, and once we get through that, we'll look at the dollar, and then we'll hit on gold and silver and Bitcoin, and then we usually hit over and start to go through some individual stocks. Yeah, so yeah, I've been actually, that's interesting, Joseph. I've been trading gold since 1979, so that's kind of part of me. That's why it's on the channel pretty much every day from that standpoint. So let's take a look at this weekly chart here. I'm gonna zoom in on this pattern here that we have, and we go to zoom 2 here. I think this is a better zoom. Yeah, about the same. One of the things that I've been talking about for a while is this 10-period moving average is what I call the demand line. So anytime you get near that line in this period, and this goes back way back to October, this has been the primary demand line. Anytime we've been below it, it's been a buy, and it just continues to climb along this trajectory of the markets here. And that trajectory, if you just look at the angle of the 3 averages I have, I use simple 10, 21, 40 period moving average, and this line down here is a 200-week moving average down here way at the bottom here. But I use those, and then the PPMs actually look at the percent change, first and second derivatives of that. And I've talked a lot about this on the channel, but this has been classic rally, a classic bull market actually. As we go through it, I want to draw a couple things in here, and then I will make some conclusions on what I'm talking about here. So these 3 averages here, so they have this trajectory of like this, and this is your underlying trend. And I've talked a lot about this. I'm just going to draw some things here on the PPMs down below. PPM stand for price, pressure, momentum, and I talk about this. I cover this often on the channel just to give some folks, if you haven't watched the channel before, is that these are elements that these indicators help you with, and I am working on some stuff to still get these out to you in the public. I'm looking at TradingView right now and trying to figure out some things there. But for the moment, this is on TradeStation, and the lines that I've driven vertically, this is where we got the increase in what I talk about this, it's the momentum before the trend. So you get momentum, and then all of these indicators will go into what I call these flat. These are maintenance mode. So we're in trend maintenance mode on an intermediate basis. And these things will continue out. And the first here, hopefully you folks can follow it. This is the short term, or where the trends really started to kick in. Right when they started to break out here, this is when a lot of our intermediate models came in to buy here, which was about 40% off the highs on the intermediate. It's not going, this was so volatile, the recovery was so quick. In a matter of weeks, this is where a lot of our trades started to come in last somewhere between May and April, and then a lot of stocks and individuals came in on our database in July, and those were very significant. A lot of those trades are still on that came in July. They're still in this trend. But the reason why I'm breaking this down for you like this is going to give you the view of how it's going to give you the view of how this thing is likely to continue along this trend that's happening on the intermediate. At some stage, we'll start to see over here on the left, these are all positive numbers. 0.37, anything over 0.25 is a trend. These are 0.37, 0.64, and 0.66. So what this tells us is that we've got to get to negative numbers or flat at least on this ppm1. So this would have to come down, you know, start to move down. All of these would have to start to move down, and what we'd see on the trend up here is that rolling over, and we see these type of patterns happen on the daily charts. They happen all the time, where you get little rolls and then momentum will reset and go from there. I've talked a lot about what I call the half pipe rule, where you get momentum. This is what this is. Momentum gets set on these first spikes, and then they maintain until momentum bleeds off, and then there'll be another spike if the trend is good, and it will reset momentum to the upside. So for right now, we're just in maintenance mode, and if you I'm going to clean this out. I got a lot going on here, but if you start to look at when these trends got in, when these things got set over here, and you just kind of drew a straight line through, you can see that this is where these things got set. So here's the 21. So I just want you folks to see this. This was a theory that was worked on way back when in the 1983-84, and we started to carry these thoughts out and this is why you can see where that trajectory, where the set happened on the increase in momentum, and then that thing will just kind of go into that sideways maintenance mode, and that tells you all about it. Now, I use trend lines just like a lot of folks, but I'm also measuring trend lines to attempt to determine when they're likely to stay above or continue to trend, when they're likely to change. And right now we're in that trend maintenance mode. I know I spent a lot of time with that, but this is important to understand from that standpoint, is that this is what's going on. So now we're going to go over to a longer term chart, and we'll probably get I'm going to speed up the analysis here, but this is even more significant because this is the monthly on the SPX, and we're looking at 2.67, 1.52, 1.10 on ppm 1, 2, and 3. And what we're seeing here is this huge reset. And I talked about this. This thing is just set. And, you know, when I'm doing daily videos, doing all that stuff, what I'm actually let me open this up a little bit so you can see these ppms I was just talking about. When you're looking at this stuff, you're seeing these big increases on these things, and they're setting. This is the reset of more momentum. And I keep telling everybody, no one's been predicting the top. This thing is in a huge momentum move. We're looking at halfway through the month, and as we look at the market grid for the month, we're trading up at the upper end of the range. RXT is 39.97 for the month of March. So we're getting R3 is 39.53. So we're starting to trade between 39.53 and 39.97. So that's definitely this at the upper end for the month. Whether we get through the higher end, you can go through this chart and you're going to see that literally, I believe it's only about 11% of the time will the market trade above these volatility lines. And these have been part of my staple of trading for nearly, I'm going to say since 1997, 98, is these volatility lines and the market grid I've been using all this time. And what these things do is give us what the expectation for any period of time. So we're looking at a monthly. You can see since this crisis, we did trade just through in November. We spiked just to the top, but we continue to see volatility drop, and now we're seeing volatility increase again. And I talked a lot about the annual view of looking back at last year, and that was going to be, you know, the anniversary of last year. So you're seeing these numbers. I think the VIX was at 80 at this time last year, and you know we're looking, you know, at the VIX not at 80, right? So you know, so it's like 20. So it's a much different point in time and everything that we're watching. But this, we're basically trading at the extremes for the month here, and I'm still kind of in the camp that we're going to see this thing basically stay in this upper range. Whether we can get through the 4,000 level this month or not, we'll see what the impetus will be. But I think some of the market action we saw, the algorithms picked up on that statement about employment, it sounds like, and off we went from, you know, we rallied quite a bit. Okay, so let's flop over and let's go to, I'm going to go a lot faster now. Let's click on NASDAQ futures. They're back down 42 after rallying back to going positive. They were down 140. Just looking at the daily chart here, what we're seeing is if we look at the market grid, the low was 12,934 and S3 was 12,939, and on the upside we've seen a high of 13,173, and we've traded almost to R1. So there's still, on a relative basis, the NASDAQ is struggling here. And what I want to talk about is when I say that NASDAQ has signaled higher prices, let's break that down a little bit. This is the daily chart, and you can see the PPMs are starting to scream. They're up at 0.34. PPM 2 and 3 is very similar to the futures, but they have a little better formation here. And I'm going to draw in a couple of things just so we can get through this very quickly. Is what this is starting to look like here is more or less like a little mini right shoulder setting up, and that we're going to go up. Whether we make a new high or not, we're going to test some of these resistance zones above the market here. And that's what when I'm saying they're signaling higher prices, it's not necessarily in a place to be able to signal a all-time new high or anything like that just yet. But this is a very positive pattern. We're seeing PPM 1 click in. We need to see PPM 2 and 3 get above their second derivative, which is this blue line here with cyan line. And until that happens, we're going to be locked in the grid here. And as you look at the grid here, that's RXT for today was 13,156, 12,150. And as I said, we did print, you know, we did print into the lower end, the S3 level on the NASDAQ today. So there's definitely still some relative weakness, but the pattern that's setting up is very positive, and typically we'll see this move up. So let's go back and once again, and we're seeing the one thing that is different than in the S&P. I just showed you in SPX that the signals that we're seeing there and the trends are very robust. Now that's not the case. They are the underlying trend, or this cyan line, which is a 21 period moving average, is at the PPM2 is at 0.55 and 0.74, while PPM1 is at 0.01, which is flat. And that's the 10 period moving average. And that's at 13,156. So we keep bouncing around that average the last 3 weeks. We closed under it. We continued to stay under it. Now we're starting to spike back above it. There's no real momentum on that line, so it's really not the primary demand line is down here at 12,700. So that's your anything under 12,700 right now, in my opinion, is a bargain to be looking at buying the NASDAQ, or at least looking at stocks that fall in that are going to be, you know, dominated within that indice. So that is, you know, I also mentioned, I think on Monday night's video, sometimes this stuff always gets to, it all blends together when you do a daily video every day. So the most likely numbers we're going to stay between, and I mentioned this, I'm sure, is the 21 period moving average 12,712 and 13,155 is the, we're going to get what I call sandwiched, you know, sandwich in here, and then it looks to me that it's going to want to start to move higher along these 21 trajectory lines that I was just talking about, with it being up 0.54 and 0.73. You'll notice that we've spiked under it twice in the last 3 weeks. So on the 5th, the week of the 5th, we had a low of 12,197. The 21 period moving average 12,589. We ended up closing that week at 12,653. The next week we had a low below that number again. That average is 12,643. And we closed at 12,924, and now we're back above it. In fact, didn't even penetrate it. And this is the demand line, what I call this primary demand line. When we're in the downtrend and it's trending down, then that's a supply line as far as sellers versus buyers. So there's going to be buyers along this line, and at a 0.53, there was less than a 30% probability for the market to close under that value. And sometimes it'll close right on it, just barely below it. But in this case that I just showed you, we continue to hover along that, and we were at substantial numbers. We were even higher at the time when that happened. We were at 0.94 on this week here. Let's see, let me get this right number here. Yeah, we were 0.36 on that number. The next number here, we're at 0.43. So we're above the 0.25, very low probability. So this is going to continue to be the line. So 12,711 is that line right now, and it is jumping right now about 65, 70 points per week. So you can just bring up a simple 21 period moving average and be able to get this to understand this analysis, right? So let's do a quick look at the monthly. We're going to do Russell next, and then we'll look at the spreads. So here is the monthly. This is really important to understand. I know I talked about this in the last live stream last week. And if you look at the 10 period moving average, 11,954, the low was 12,000, basically 200. So we got close to that. But the PPM was at 3. Let's see where it was at that time. The PPM was at 353, which was almost a 0% chance. It's less, at this level, it's less than a 10% probability. So a 90% probability that it would stay above that 10 period moving average was what was happening there. And you can see we've got a pretty decent reversal. So when you start to look at the NASDAQ outside of the day-to-day noise, and you start to look at it, looks like we're going, the close that we'll be looking at, we're 2 weeks out here at the end of the month, will be the close of last month. Something greater than 12,900 is going to be positive, and we're also going to have basically a reversal off of the 10 period moving average with very robust trends on the upside. So the trends in the NASDAQ and all of these markets are on a secular basis, a monthly, are strongly up. On an intermediate, they are strong up. On a short term, they're very mixed right now as I went through all this. So let's do Russell very quickly, and I'm going to back this up. So the Russell has started to do that slow rollover, but look what it did here. The 10 period moving average 2275, low today 2289. We look at the market grid here. 2292 was S3, so we printed down to S3. We held support. We have the 10-period moving average. You folks know, if you watch my daily videos, that we have a lot of, I look for clusters of numbers. So we start to look at the PPMs up, PPM 1, 0.47, less than a 30% probability for it to decline below the 2775 level. So if you were watching this and looking at the market grid, these were good buys this morning, and on the Russell. And just quickly, we're going to take a snapshot of the weekly. We did get a RXT sell signal on Friday, which means we get 1 to 2 weeks of sideways in this pattern. The 10-week moving average 22.21, running about 20 handles per week. So that'll probably put us up with expectations maybe for bottom end around 22.72. Have to look at some of this, but look at the trajectory of the Russell. It is almost a 45-degree angle, all three averages. So everything I talked about a few minutes ago with these momentum, this is very evident here on the Russell. And those of you who follow the channel for a while, you can go back and look at some of the July, August things I was talking about. This is what I want to show you here is when we go over here and we take a look at the Russell versus the NASDAQ. This is back August, September. I told you folks to be looking for the small caps and mid caps to start to outperform the NASDAQ. And this is the spread, Russell versus the NASDAQ. And we continue along this trend line. We did get whacked pretty good the other day, and that goes to, and reflects in that daily analysis. We're just looking at that. But this is exactly, this trend is very big. And this is a daily chart that we're looking at. If we go out to the weekly, you can see this is the first time, I would say, going all the way back to 2017, since when this decline and this underperformance of the small cap started against the Russell. This is the first time we've seen a really good basing pattern and finally seeing it start to move up towards resistance. We've got a little ways to go, but this thing is pretty played out from that standpoint. So there's more upside, but it's played out for the moment. So if we go to a monthly, this really brings into perspective, and I showed you this before. You go back to 09 is really when the big major secular trend started. And you can look at all the previous rallies that happened in the spread, and this one's the most significant. And it won't be a straight line. So we're going to see the NASDAQ take back control a little bit, and you'll see the spread come back in. And then, but on general, my expectation is we should see this thing move a lot higher. We're at 0.18. We should get it 0.22, 0.24 up into this range where I've got the crosshairs up in this range here is going to be where you're likely to get to. And that will be that. So there's a lot on this trade. This is the beginning part of the trade. This has a lot to do with higher yields, economy coming back on, all that stuff. And the only thing that has bothered me a bit on this is that what we've seen here is it's almost in every mainstream financial media is talking about this trade now. So we know it's a little played out. There's still some stuff in there to do, but I talked about this going back to last, I don't know, it's probably coming into Christmas time when I took the break for Christmas, is you got to the point where, you know, things get kind of played out pretty good and they start to stall. Well, that was the point in time where we started to see even an enhanced version of this rotation. You can see that if I go back to the daily chart here very quickly. And this was, here's December, and that's where, as we came into the first year, that happened. Now we're seeing virtually, I mean, just pay attention when you're looking out there, and you're going to see all of these stories about, you know, the small caps and mid caps and value and all kinds of stories out there. And I said this going into the markets, like when we came off the lows of last March, April, and we got into around November or so, I told you then that the easy money was done. There was still some easy money out there to a point, but the really simple easy money buy the dip stuff worked really good. That stuff still is out there, but what we're seeing now is these spreads have gone to a point where picking the stocks, the right constituent list in stocks to move this forward is going to be harder from this point than it was 3 months ago, than it was 6 months ago. So this is a big theme that I think is that this is the theme that will continue, but it's also one that's gotten way too mainstream, and it always makes me nervous. And so anyway, enough about that. So, all right, we covered the S&P. We got through quite a bit of stuff here. Let's take a flash over. Futures have stabilized. Here they are printing that 70 number again. So they did manage to print up to that number. Let's see what we can see here. Yeah, so they actually did it shortly after I talked about it, that we printed up to 70. Where did we go down to? We went to 52 again. Now we're back at 70 again. So pretty good trading range set up here. This is a 1 minute graph. But here was that dragon head I was telling you about. Usually dragon heads resolve themselves and continue that direction. And so now there's nothing significant here from a pattern recognition viewpoint. See what you folks are talking about for a second here. Yeah, Christoph, that's interesting. Before we know, robots will be serving us in retail and in restaurants. Yeah, all you have to do, I watched this video some time ago. Here's new highs, trying to print new highs in the futures here as we're talking. But I watched a video, it's been a couple years ago, but if you look at what they've done in China, primarily in Shanghai, all that stuff that you're talking about already exists. You sit down at a table, you order it, it's got like not a conveyor belt, but almost like a thing that all of a sudden your hamburger or whatever you ordered shows up right on your table. You just filled everything out and punched it in. Of course they use WeChat. They've got all the digital money out there, so you just put your phone up, and you can't even buy anything in China now. With if you had RMB or yuan in your hand, you couldn't even buy it. I spent a month in China way back in 2000. It was fascinating because one of the things that I had talked about after I came there, I said, if these people figure out how to digitize this economy, it will go crazy. Of course, they figured that out. And so now that's exactly what's going to happen. And especially with some of the initiatives that are being pushed, is $15 living wage stuff that's going on. Most of those jobs that's going to be McDonald's will just be a kiosk. There'll be 4 people making sure the machines run in the background, and you know those things will become very automated, I suspect, and that's going to eliminate all the jobs becoming. So I sort of feel sorry for all the folks that are storming the U.S. border right now. They're coming into a world with no jobs. So we're printing 74.50 on the futures. We're making new highs as we speak here. But yeah, so automation is going to be a thing. So you know, I haven't made a comment about Kathy Wood today. So I'm doing really good. Here we are, new highs again. 75 prints. We're up 13 handles. These are all time new highs that we're printing here. So we're definitely seeing this thing go up. I want to flop over to another screen here real quick just so we can see NASDAQ futures now up 58 handles. So I know I haven't looked at the channel. I'm sure the trolls were out saying Bob was wrong again. You know, You know, what I, just so you folks know, like on my daily videos, like I said, they're to help primarily for perspective for people that want to have that and just try to keep the anxiety down and trying to figure out where the noise is going to go. And sometimes the markets get so noisy, it's impossible. Sometimes the noise gets so loud that you can figure that out too. So that's good. Yeah, I saw something, John Curtis, that I'm kind of looking at your comment here. Um, I saw something this morning or listened to something this morning, something I never thought about, okay? And is that kids that are being born right this second, it's possible they'll never drive a car. We could have totally autonomous driving. You just get in a car. I mean, where's my phone? This will be your car, right? You just call a car, and you know if Elon Musk has his way, every Tesla around that's released to the world, you'll just be able to summons a car, anybody's car to use, and then you're going to monetize your vehicle. Because if you think about it, I know this is a stat that I think we only drive our cars like 5 or 10% of the time. So you know, imagine if I'm sitting here right now and my car takes off and goes and picks somebody up, takes them to the store, comes back, whatever. So it's going to, there is a new world coming out there, and that's going to drive a lot of stuff. You know, I think that um, yeah, I think we're going to see a lot of interesting things start to happen. So I just want to look at this real quick. So NASDAQ now up 71 handles on the NASDAQ futures, back above the 10-period moving average. I just want to take a look at the market grid here, see where if there's any numbers up here for you folks that are watching, so we can start to take a look at this. Let's see here, highs 287. So next number on NASDAQ 13,412 intraday. So I'll just give you that while we're sitting here and hanging out together. Um, yeah, let's take a look here. This is interesting. One of the things I want to go to next, and we'll just segue right here, is let's talk about the. I'm going to stay on screen, but I just want to make that just a little smaller there. I know. Sometimes I have this thing about talking screens, okay? So I like to be on screen just a little bit because it at least gives you something else to look at. I hate doing presentations with PowerPoints that talk to you. I hate them. Anyway, so here we are. We're on a weekly mode, but let me switch over to a daily here. And daily, we spiked up on the 10-year, so we're going to go through interest rates. We're going to talk about the 10, look at a couple of these elements here. And one of the things I've been talking about off and on in the channel last week, all that is, once again, this trajectory of these moving averages. You know, you folks that keep coming back, I see a lot of common names, appreciate it. You know, you know, tell your friends, let's get our subscribers up over 30,000. We're very close. So if you haven't subscribed, you're watching this first time, subscribe and like the video just so we can continue to grow, because we're trying to do some really special things for our community and for folks in general. But as we look at this, we did see this thing print up to 1.689, basically 199. I mentioned a number in last night's video, 172, 1.72, and 1.76. Those are next levels that I can see this thing going to. But just as a daily pattern, and I've talked about this 4 weeks now, that the trajectory, just like I showed you on the moving averages earlier, if you didn't see that, it'll be out there in the replay. I don't want to do it again on this chart, but we're seeing that same momentum surge followed by trend maintenance mode, and all of these moving averages have that nice slope. And I've told you folks this before, back in my trading days, I had a buddy that would hold his fingers up like this, he would always go usually a left hand like this. It wasn't the number 3, but it was that the moving averages were all at an angle, meaning are we in trend mode? And I would give him a thumbs up, thumbs down on whatever we were trading. Like he goes, is this a trend? And I'm like, whatever. And so but that's what it came from, is looking at these angles of attack, because all the PPMs do, stands for price pressure momentum. They're measuring the angle that these moving averages are moving in, and then attaching some probabilities to them on how likely they are to remain above those averages. So let's flip over to weekly. Yeah, I hear you, John Curtis. I understand totally. Yeah, absolutely. I'm as addicted to anyone on this thing. I mean, I live on this. It does a lot for me. And I had one of the first home computers, which was an Apple II, right? That's what I started on. Yeah, that's interesting. Yeah, Don Wiz, is the 10 flattening out? Not quite yet. We're talking about the 10-year. Yeah, we're going to do gold here in just a minute. So we're at interest rates, dollar, gold. So stay with us. As they say, stay tuned. Weather later in the channel, right? So this is, but as we look at the weekly, we're seeing that same trajectory, but the real support numbers are quite a bit lower. So we're looking, let me put these up here so you can see this. We're looking at right now 1.3, but this number is jumping roughly 0.5% per week right now. But we have like very robust numbers. The PPM one at 4.27, PPM 2 at the 3.6, and PPM 3 2.7, and 0.25, not 2 point something, is a trend. So these are monster trends that tell us that there's very low probabilities of going below these trend lines. But what it suggests through these PPMs, especially when we're looking at a weekly, is that they're in a very robust uptrend, and then that it also gives us more understanding and more validity of looking at the shorter term charts and the support levels that are on that chart. So if you go back to what I just said a minute ago, somewhere I mentioned in last night's video, 1.59 is a huge number for a pivot standpoint on these charts. So let's look at monthly here, and then we'll do a quick yield curve view. So monthly is starting to get close to the number that I talked about several months ago, which is that 1.9, which is the 40-month moving average. If I put this up here on the most recent right now, it's at 1.90. It is declining right now at 0.2, so it's going to be 1.88. And I've targeted this 1.88 number for a while. I think when we get to 1.88, that's going to be where the market stops and stalls right there, and then we see a consolidation probably between levels we're at right now, the 1.6 handle, all the way up to 1.8, 1.9. If it gets above this number, then it's going to be serious. Now let's take a look at the PPMs. On PPM 1, a plus 11.98. That's insane. PPM 2 is turning up. It's through its first and second derivative, but still negative. But that will start to turn up in the next month and 2 months. That will start to roll up. And now what we're getting is 2 levels of trend turning up. And then that upward level will be the top end of this thing. Let's just take a look. I'm going to slide this over. This is going back to 2014. This is the taper tantrum. And what we did there is we ended up spiking through the 40 period moving average. If you recall in my opening comments today, I was talking about this thing getting above this level here, which is the 1 point, I'm sorry, getting above that 40 period moving average or spiking up to 2.5%, maybe 3%. This is what happened in the taper tantrum as we went through that 40 and we continued for several more months to stay well above that number and printed all the way up to 3.02. Boy, I remember that number like it was yesterday. It was a number that was the key pivot number for a while. On this next rally here, we go to 17. This was when we start to see that we moved back to the high was 2.62, and then ultimately we got to 3.23 back in 2018, and that was the beginning of the end from the standpoint. This is where the big decline came in to print down to the all-time low, which had everything to do with, most of this would have never happened if it wasn't for the pandemic and all the disruption and the Fed coming in and dropping everything to zero, right? So now we're seeing some stabilization, and this is actually a really good point here, because as we look at where were the prices before this, and on September and the fourth quarter of 19, we were in that 167, 177 level. So what's happening, and this is happening and should happen across the board, is that we're going to see some stabilization, some getting back to normal would reset the clock to 2019 and how markets were structured and how they were acting at that time. Now, during 2020, there was a monster amount of people been dislocated, potentially forever out of jobs, right? Maybe the hospitality industry will come back. We'll see how everything flows into place as we go through this vaccine situation and everything that's going on, right? But what we're seeing, though, is that we're moving back to that 2019, and this will be, I'm just going to draw a box. I don't have any good drawing tools with this. I still need that. But I'll draw a box around it. So this, I'm going to call this the midpoint right here of 2019. And I'm going to crop this off, and I'm going to say everything that happened here was an aberration in hindsight. This should have never happened. It happened. The Fed stepped in and corrected this stuff. So you can say anything you want about the Fed. They actually, I've seen this before in hindsight. This plugged that hole. This is what is causing the markets to be to stabilize. And they did their job here, and that's exactly what they should have done. And so the goal here is on interest rates is to get back to normal. And meanwhile, they created all kinds of capital, all kinds of stuff. Excuse me 1 second here. Okay. Sorry, I was getting a sneeze. I forgot to take my Claritin. That's funny. You're probably right, John Curtis. No one's listening to Powell at all. Yeah, and Garden Check, I do think that universal income, this is the introduction of it. I said it a year ago, actually, on the first stimulus. And I do think, yeah, just come back on screen here for a minute. But I do think universal income is here. It's not very much right now, but you have to think about it. If the goal of the government is to control everybody, You're dependent on these checks coming in. They've got control, right? That's your new boss. Somebody made a comment earlier on this chat line that um, that we're all going to be working for the government, and that's kind of what they want, right? That's the way it looks, right? So anyway, yeah, it's going to be pretty pretty good. Yeah. So okay, so let's get back on screen here and get back to work. So we've got that covered. Let's do a quick yield curve look. And this is what I've been telling you about. We've got an all-time new high on the spread. 530 spread is blowing up here, okay? This is big. I know the markets are turning up, but this is big. If the Fed lets this go, I can't even I just got to look at you guys when I say, if the Fed lets this spread, that spread I was just showing you go, and it blows up to the next level, that will be easily going to see the 10-year print, that 190, okay, 1.9. That is going to happen. That's what this is telling us right now. And what the Fed did the other day, they went on a binge on buying 10-year fives and tens actually, but they bought a lot of fives and they knocked this spread down. The fact that it's screaming back like this is telling us everything we need to know, and this is what market participants are telling us. And I just want to say this because the Fed has a lot of control, but they aren't the market. They are able to control things by jawboning, doing this crap they're doing today and flaunting Powell out. Now they've got Janet Yellen, and she knows from being the Fed chair, she knows all the little tricks and all that stuff. And I believe she made the comment, and maybe you couldn't classify this as a financial crisis, but I remember when she was chair, she said there'd never be a financial crisis again in her lifetime. Well, that's not exactly right. No matter what triggered it, last year was a financial crisis. Just as I showed you, they filled the gap primarily and they said they would buy all these bonds. They did everything they said they were going to do to the point. And by the way, most of the things that the Fed said they were going to do, the free market took care of it for them. So they just said that we're willing to do this, and everybody else and the markets took care of themselves. And that's my point here, is that when we get into these type of patterns like we're in right now, the market ultimately will have the say-so. So if the bond vigilantes show up, that's my concern with the spike on the 10-year going to 2.5%, 3.5%, and challenging those numbers I showed you going back to 14 and 2017, 18 period when we were printing all the way up to 3.23. This is a risk in the markets primarily because of all the debt everywhere you can look. Not some of the consumer debt is dominated by different elements, but corporate debt and sovereign debt across the planet has everything to do with what's going on here. So as we go to the, so let's do the next logical place, and let's go over and take a look at, let's take a look here and just see where, look at this, S&P now 39.79. We printed 81. I've been talking about this 39.80 level for a couple of days on the channel, so that is definitely definitely happening, right? So we're what 2 minutes if we want to print 4,000 on the S&P. So let's go back and let's go to the next logical place, and let's take a look at the dollar. Then we'll go to gold, and we'll continue down this trail. Yeah, gold's doing really nice. I've been really talking up gold hitting this levels that we're hitting, so I'm anxious to get over to that. But here's the Dow down a little bit. It peaked out. I talked about this. I think I'm not sure what day was Wednesday, but last week I talked about the Dow hitting a peak. We should come back into these moving averages, probably heading toward 91.15. Everything is pretty much overdone. PPMs are trying to roll over on a short-term basis, which just tells us that this thing is going into a consolidation above the 2140 period moving averages. We go to weekly, you'll see the 40-week moving average. Now we get sandwiched somewhere between this lower end of things. Let me bring this up on screen here. So what we're going to see here is the 21 period moving average, 91.18. We should head toward that number, but the support levels are going to be between the 10 and 21 period moving average, 90.95, 91.18. We look at the PPMs on the 10, it's at 0.17, not quite at trend level. Everything else is basically flat with the exception of this 40 period moving average, which is still down at 0.15, and that's going to supply some pretty decent resistance here. So the sandwich job will be between that 40, 92.66, and the extreme would be 90.95. And if we just look at this is weekly, if we look at the weekly grid, this will also dominate. You can see the range there is almost exactly what I just talked about. 90.33 STX, which is the extreme, 92.99 on the upside is exactly where that 40 period moving average comes in right there on the 40 week. 92.66 as R3. Okay, so R3, probably S3 are your extremes, maybe this S1, R3 on a weekly basis. That's going to be the range probably going into the next couple of weeks. Okay, so last chart, monthly on the gold and the metals. So here's the monthly. This is the big number is 92.59, 10-month moving average. PPM's down minus 0.72, minus 0.23, and flat on the 40. So my guess is we've got at least another month of sideways, and then I do expect to see the dollar move up, and that probably will have a lot to do with the interest rates and all of that. And I think that's really going to be a barrier to get above this 92. Let me just get an actual value. 92.60 is going to be major resistance for at least the next 2 months. And then if we can get the PPM to turn through its first, second derivative, then that will tell us we're going to move into basically back into that level that we're talking about, going back into that 21 and 40 period moving average, which is 95.11, 95.55 on the upside. So that's where we're most likely heading, but we're also most likely heading there in 6 months, 8 months, or longer. It's going to take a while to get to that level. The encouraging thing is the formation of the moving averages. Thanks, Derek. Appreciate it. Okay, let's do gold. This is monthly gold, but let's go through the spectrum here. Then I'll do silver next. I'll do gold, silver, and then Bitcoin. That is the plan. Yeah, James, I was also 87, 2007, been through all of them and have traded those, and one of my claims to fame, I'm missing one of my old archives of my newsletter. I wrote a newsletter in 1987, September 16th of 1987 to be exact, and it said the risk reward in owning U.S. equities was zero. Get out. And I wasn't really looking for a crash, but it made me look really good. And I was a head analyst for a firm with about 5,000 reps, so I got a lot of play out of that. And but the point is, I didn't miss any of these. I have a lot of documentation around the 2009 and the 2000 because our software was in operation since roughly 1996, and then in 1998 is when we started handling institutional money. So the 2000.com, 07, and even last year. So it's fun times. So here we go. Gold. So the gold is actually doing what I've been talking about for the last couple sessions on the daily market, on the daily comments, is we're starting to get above that 21 period moving average. PPM1 is now screaming. You can see it's vertical here, and PPM2 is through its first second derivative. And what everything is pointing, I talked about this last night, heading toward 1758 to as high as around 1780, maybe 1790, and ultimately I believe we're going to go back above 1800 here. This is the daily chart. You can see that. Let's go to weekly. Weekly is right where the resistance point is. Let me bring this on screen so you folks can see this. Is that the R2 on a weekly is 1759, R1 1738. We're through that, and we're heading for probably that 60 level, and that should continue, I think, on the upside. And you know, we've always had gold as an inflation hedge. I talked a lot about this today, and I think this is going to come into play. While the market's been drifting lower for multiple weeks, I still believe longer term, which I'll show you here in a minute, we're going to print an all-time new high on gold. It's going to take a while, as you'll see. But this is the weekly chart here. PPMs are starting to turn up weekly finally. We're still negative. That PPM 1 is at a minus 0.50. So that says 1785 is a ceiling for right now. And I'm going to put it at 1760, 1780, any of those prints. That's going to be about all you're going to get for the moment, probably for another couple of weeks. A little more consolidation. Then ultimately, you'll start to move back into the 1800 handle and move toward maybe 1840, and then ultimately back to 1870. If we get up to those levels on this chart, you're going to start to see a larger formation start to come into play, which is going to set up some intermediate trends. So let's go to the monthly chart, and this is something I know I usually don't get a chance to get this deep into gold unless it's on a live stream, and we always mark up these live streams because I know they're long, they're like 3 hours, so we'll mark when I talk about certain things, so you can go back and just go along the timeline and find that. So make sure if you're watching replays and things of that sort that you do that. But the bottom line is, I talk about these demand lines, right? If you've been hanging around for a little while, for the last hour or so, I talk about these demand lines off of these moving averages. Now, for me, this 21-month moving average is a huge demand line, primarily because it's up at PPM2 is up at 0.68 right now. It has crossed through its first and second derivatives. And this is why I'm telling you, I believe gold will make an all-time new high, but it's a ways off before that's going to happen. It could be a year and a half, okay, just so you know. So let's take a look at this thing, and about the most that you could hope for from a secular viewpoint, from a longer term viewpoint, is if we can maintain above the 1736 level, and we're trading 49 right now. If we can maintain above that level at the end of this month, then you've got a good shot to keep working toward the 1860 level, which would be the 10-month moving average, and that's not, doesn't have a lot of downward pressure. So what's going to be interesting once we finish the month of March, looking at how the market grid adjusts and see if we can get it to uptick depending on how this month finishes. So there's a lot of things out there, but the PPMs are still positive on that PPM 2 and 3, which tells us the long-term secular trend is still up. Okay, so we're going to switch. We're going to go to silver, and then Bitcoin, and we'll probably do Ether at least. Okay, so I'm going to just keep running on these things here. I know we're getting into almost that last. Usually I like to get to some of these other individual issues, but if we look at silver, PPM 2, PPM 1, 2 have already starting to turn up, and this pattern in silver is potentially very explosive, where we could see a 28 handle, maybe even print toward 29. It's not signaling anything yet, I don't believe. Let me do something here. Now, still on from a model standpoint, we're still short, but I think that's going to trigger out. So we have not got a signal on the models as of yet. So, but it's very close. So if we can close above on a daily silver, the short-term triggers are going to be the 2670 level. So if we can get above that level, the high is 2661 today. That will set the tone for a move to go back up and test some of the 2840 handles, stuff like that. And that's what I was saying, is that we got a really good shot at hitting those levels at that time. So as we look at weekly here, now we start to see this weekly pattern's a really, really tough one. Although PPMs are starting to turn up, and the demand line for this one right now is the 10-week moving average, so 2634, and then the next level, we did get down to that 21-week moving average last week, but we're right back above with this PPMs turning up here. That's going to be your demand line now, 2634 on a weekly basis. And you should start to move up toward the upper end of the market grid, which R1 is 2640. We've exceeded that one. So R2, R3, 2695, 2750 will be your next range. Whether we can print that in the next couple of days, I doubt it. But more than likely, when the market grid comes out for this week, you can do that. And by the way, you guys can get the market grid on silver and a lot of these markets if you want it. And you know, you can just sign up for WaveTech and you get it off our portfolio expert. It's $3.18 a day. You know, one trade more than makes and pays for that whole service, and you get access to our all 16,400 buy and sell signals on every stock and indice and all that stuff that we have out there. So that, you know, quick advertisement. But the bottom line is, this is where these are the numbers if you're trading this stuff that you're going to need to know. Okay, so let's go to a monthly view and then off to Bitcoin. So the monthly is really interesting, I think. Let me get this off screen. Is we've got this big long consolidation level here. We tried to spike through last year, and now we're setting up. I talk about these all the time. These are what I call a dragon head formation. Typically, I would say on a 60-70% of the time after a dragon head, these things turn up. Let me move this over so you'll be able to see this just a little bit. As I talked a lot earlier, this is a monthly, so we're talking long term on silver, right? So what this is going to do here is this. We were talking about these these sets of this momentum where it spikes up and then you get into maintenance mode. And that's exactly where we are right now. We're looking at huge numbers, 3.16, 2.37, and 1.11 on these ppm 1, 2, and 3. These are insane upward ranges, right? So I talked to you about when you get on a monthly chart and you start to eliminate the noise, so 1 bar is a whole month, the noise of the day-to-day things that get you to be emotional and get in and out start to go completely away, and we start to look at these long-term trends. So I was talking to you about, based on that maintenance, what I'm drawing in here is that these ppms are going to go in these sideways maintenance range, which means they're going to maintain a very high level of momentum for multiple months, and possibly this can carry out in something like this, like 12, 18 plus months in a cycle, right? So what that means is these ppm, this projections, they're saying that these moving averages are going to continue at this level, and then therefore suggesting the market's going to go back. I'm going to zoom back out here in a second, just because I want you to be able to see this. So I'm still there. I hate to sound like it bothers me when I see these commercials on TV. What's the guy with Rich Dad Poor Dad guy? God, man, you know, I just hate these guys. But they're telling you silver's got more opportunity than gold. I have to agree with that from that standpoint. That's hard for me to say. But if you look at this thing and we look at this full spectrum that I'm showing you on this chart, it's long-term, very bullish. 45, 50 bucks is certainly a long-term goal here. And, you know, that's decent. It's nothing like you would have made in a few months in Bitcoin, but there is some upside. And I know the whole squeeze story and all that stuff on the internet on this thing. And, you know, this event that I'm talking about will have more to do with economics than it will do a squeeze play. Okay, it will do. And I know the manipulation story. I know all of that stuff. And I'm just looking for one of the guys that I know. I hear all the time about this. And so yeah, so anyway, that's the view on silver. Let's go ahead and move over and start to talk about, let's go to the cryptos. And volatility, huge. Do have a little issue, and I'm trying to figure out how to solve this easily on the daily market grids that we issue out to all of our subscribers. The problem with the daily market grids on Bitcoin is when the market grid gets run and posted, it's the service that I use to create them. This chart updates, daily chart updates at midnight Eastern time. And unfortunately, I'm running the market grid multiple hours before that happens. So I'm trying to figure out how to get the right grid, because it's almost you're a day behind on this thing. I'm working on trying to find a way to do that. Yeah, and Christoph, I would, matter of fact, if you would do me a favor, because I know this is one of your areas that you focus on, is if you would maybe come up with a couple good silver stocks under your mining stocks. I would like to take a look at a couple of those, because I agree with you on how to play silver. That is the way to do it. So just want to put that out there. Okay. So here we are, Bitcoin. One of the things on the market grid, I'm going to bring this over. This thing, it's pretty good. This was interesting. We got a STX buy signal 2 days ago when that crazy move down happened. It closed below the STX number, 57,527. The low was the close was 54,237. So we closed just below it, and that suggests that we get 1 to 2 days of upward movement. Now, any of you that have heard about this market grid situation, this is basically a volatility calculation with some Fibonacci numbers that are generating these R1, R2, R3 numbers, and they work really well for shorter term trading. And you can just look at today's numbers here. We traded just below S1 54,180, S1 54,494, and then looks like what's the high? 947, just above our I got this number right here, one second. Just about to R3 here, 58,800, 58,947. So we're trading between R2, R3, but they set up a good range. But once again, same situation that I talk about on all these things. A simple, if you understand these PPMs, PPM1 is up at 1.61. And if we go back 2 days ago, the 10 period moving average, let me get the actual value here. The 10-day moving average was at 53,797. We traded 53,256 and we closed back just above that average. But the PPM 1 was at a 0.93, telling you there was only a 10% probability to close below that value, which it didn't. We look at the next day, that same huge rate of change, huge increase value in that angle on the 10 period moving average. We held it the next day, and today we traded under it, and that was your value trade on this thing. And there's I guess the best way to look at this, and when you see these accelerating moving averages, they're going to be key. The fact that they go under them is not as important as where they close at the end of the day. So if I converted this chart over to like a candlestick chart, right? Let's do a candle. You're going to see exactly what I'm talking about, where the body is going to stay for the most part above that average, right? So that is something there that is important to watch. I think I can zoom in on this thing. Yeah, you can see a little better here, and yeah, same zoom level. But yeah, so you can see that these are, that the bodies are staying above that 10 period moving average. That's pretty common, I think, in this type of situation from that standpoint. I'm an old school bar chart guy. I don't really use candles a lot. Yeah, so I like that. GME was the volcano, silver might be the tidal wave. Yeah, I don't think you're going to be able to match GME. That's a pretty tough one. They go up 5,000% on GME or on silver would be pretty insane. Okay. Let's go to a weekly chart on Bitcoin. The monthlies aren't worth it on this this platform. The same thing. Let's just move this over. This goes to everything that I've talked to you about today. Is these angle of attack on these moving averages? I mean, if you start to extrapolate these out, this is on a weekly level. What you're going to see here is there's another. If you carry the values forward, so here we go. This is the 10, the 21, and the 40 basic, and so you get them spread out. And if you start to move up the timeline and start to calculate take the what I call the stabilization mode here, which is going to probably be closer to around 3 or 2. That's 2% per period, in this case per week, and you start to carry that forward. That's where this market should continue in a channel up. And you can see that even the market grid, which is these orange lines outside of this thing, is actually showing you exactly that from the standpoint of you're going to stay well within these ranges. We may get more crazy volatility. You know, we're getting these daily ranges of $3,000 and $4,000. I mean, you know, we all remember when Bitcoin was 3,000. It's up 2,000 right now. Up, you know, so the numbers as you go up the scale, the values of these are going to be much larger, and we're going to see a continuation of this volatility increase, not decrease. And you know, I don't know, if you go on Twitter and look around, and a couple of people that I follow, I mean, I think some of the stupidest comments I've ever seen are, you know, just, you know, people talking about store values and stuff like that, and if it was that it's too volatile for that and all that kind of stuff. And you know, meanwhile, we're talking about if you'd have bought and held the stock market in 2000, it would have taken you 13 years to break even. But no one actually mentions that, because all of these, listen, most people on this planet have an agenda, and that's one of the things that I have talked a fair amount about, is not being able to do that, and you know, don't have an agenda. That's why you do quantitative stuff. Even anything that you and I look at is good. So let's see, you know, it's going to have some bias in it, right? So we're half past the hour. I'm going to do a few stocks. There's a lot to talk about today. I said I'd do Ether. I want to flip over to looking at a few individual stocks. Don't give them to me yet, but I'm only going to be able to do about 3 or 4. But I want to tell you about something I'm planning on doing, and I don't know if it's going to be multiple videos. I've done a couple recordings. I'm pretty happy with how they've come out so far, but I'm doing something I think is really important, whether you're using WaveTech, Portfolio Expert, doing your own thing, is how to deal with the emotions of trading. I, many years ago, used to do a training series, we're talking in the 90s, on how to eliminate emotions and how to do things. So I'm doing some videos on that. I'm anxious to get that out to the channel. Most likely, I'm working on a new channel called ETF Hackers. It's probably going to end up there. Maybe one of the primary videos that gets released to start that channel. That's what I'm working on. Hopefully I'll get it done. That channel won't be daily releases, but more likely weekly and more incrementally as that channel goes forward. But that's important, because I tell everybody, you know, we were talking about the squeeze and GME and all that stuff, and I keep telling everybody, if you know, stop paying Wall Street with these piece of crap ETFs and all that stuff. You know, a lot of people have fallen in love with Kathy Wood, but she charges 75 bips to hang around her. She's an expensive date. Okay, that's all there is to it. You know, I will show you how to eliminate that, and I already have. So, but that's kind of the thrust of what I want to go forward. But I am going to be doing that video and getting that released. I've got 2 small segments that I'm piecing together right now, trying to put the video together, and I'm excited about that, because one of my associates was talking, and I got into a rant about how to do this, and I thought, man, that needs to be out here, because I know a lot of you folks are making discretionary decisions, And the hardest thing that you'll ever do is do discretionary trading, which is looking at a chart, listening to me and 50 other people, whatever you do within your process, and then trying to get that, make a decision in the market, and then try to keep some kind of sanity and some kind of strategy that's going to walk it forward without getting emotional and, you know, doing what all the folks tell you you can't do, is you can't time the market. You can time the market. So yeah, so okay, here we go. It is that time. Let's go ahead and give me a few stocks that I can cover, and we'll do a few of those, and then we'll watch the close together, and I will head for in and out. Yeah, that's always an interesting point. You know, the government will squash the Bitcoin. Yeah, that is going to be the thing, right? All right, just looking at some of these things coming in here. I know you folks are just getting geared up, so let's we're gonna have to stop probably right there. I'll go with that, and then we'll see what happens. Bear with me. Let me just write a few of these down so I can get some kind of sequence. I always do Apple and our friends over at Tesla. Yeah, so looks like the markets have stabilized a little bit while I'm looking at this. Up, got right up to that 3980 level on the S&P. Nasdaq futures up 77 right now. Alrighty, I've got enough here to at least get started. I quickly, I just put up a lumber chart, and this is something I've talked a lot about. And you know, lumber has went up. If we go back, let's say pre-pandemic, it was at $58. Now it's at 855. This is the nearest futures chart, so there's some premiums in here that cause some of this. I need to get a hold of a cash lumber chart. But this has a lot to do with what's went on in housing and everything, that the great exodus of California and other major cities that people are trying to get away from, you know, and just the cost of building houses, I think, that's increased. Just about 25% of the increase in housing has happened just through lumber prices. So it's been a yeah. Yeah, if you guys know any cash lumber indexes, you can help me out there. That'd be great. Okay, so let's start with Apple and Tesla. We'll get those out of the way because I know a lot of folks are watching these things. Just want to get rid of this. You know, I talked about, I don't know what I can look at it here. This is weekly. You know, 6 weeks ago, I told you folks that Apple was going to roll over. we roll over right to the 40 period moving average. We look at 40 period moving average up 0.87. If I go to where was it last week on the 40, it was up at, when it hit here, at a plus 0.83. So that suggested only a 10% probability. So you could have actually bought 116.17 was the 40-day moving average simple, and the low was 116.17. I'm sorry, the low was 116.21. So it was almost smash on hit. Now we're going to be sandwiched. The 10 period moving average is down at 0.55. So Apple's hitting somewhat of its limit on the upside, around 128, 128.75 or so is going to be a resistance point. But PPMs are trying to turn up, but there's still a lot of negative there. The demand line right now is, there's actually two, but the best one is actually the 40. That's the primary demand line, which is 116, 117 is where that line's running right now. So let's go ahead and let's do Tesla. Yeah, they're throwing a lot of money around here in these indexes. We're seeing some volatility in the NAS right now. So let's look at Tesla. This is the weekly Tesla. I remember everybody telling me Tesla's going up forever. We got the RXT sale back on January 8, and we got sideways, we got down. We almost printed down. I made a comment on this particular week that I thought we could print the 500 handle, which was this 40 period moving average, and we reversed that week, and now we're back above this primary demand. 2.02 is PPM2, so your pivot number is right now is the, let me bring this on screen so you folks can see this, is that 668 number. So anything near that is a buy. We had a low of 651 today. And if we look at the grid, the weekly grid for right now, we're looking at 655.16 was S1. We had a 651 low, highs 713.18. We're working towards an R1 732 level. And then we have, in this sequence, we have a sharply declining 10 period moving average 758. So just expect to be sandwiched between a simple 10 and a simple 21 week average. That's going to be your trading range. We're going to try to move up toward that 10, but it's coming down big numbers every week. And that could be enough to cause it to retest the lows that we see on this chart. So there's still a lot of work to be done on Tesla from that standpoint. This is one of my favorite stocks, actually, PLTR. I call this the most dangerous stock on Wall Street. We'll see. We did print over here below 22. If we close under 22, then I'm looking for 14 to 12 on this stock. But having said that, we're starting to see some things set up. PPM1 is at a plus 0.64. We got mixed numbers here. So there's the next 3 or 4 days, this could set up a pattern and we could head back to 29. I don't necessarily have it out for this stock in any way, but it's just one of those where probably the cap on the stock is going to be there, and there's not enough data on this thing to, I believe the company's been around a long time, but the has been public for that long, and I don't have enough to calculate. Let me just see something. I don't have enough to calculate the PPMs on this, but bear with me one second on a weekly basis. Bear with me 1 second, folks. Yeah, I'm going to bring up Portfolio Expert, our platform, and the good thing with this platform, I can calculate the PPMs. We can't see it on a weekly basis, so we can do that, and we'll even convert it to candlesticks for you, so we can look at that. But this is our platform. What you can see here is you can't see the PPMs because we have the ability which to calculate things from the second week of trading actually, and so we can actually figure out how to do the PPMs on our platform. Even on a brand new stock, we can actually trade a new offering stock, and the second day we can start modeling it. So but as we look at this thing right now, we're seeing the PPMs are still negative on a weekly basis. So it's trying to set up a pattern here that demand line is around that 25, 2460 level on that. So that's certainly something to look at. So let's go back. So you can't calculate this on TradeStation. They don't know how to do this stuff. Quickly, what time are we getting? Be 45. Here is CGC, Canopy Growth. Get decent trend lines going here, but PPMs are starting to fail a little bit. There's still a upward bias, so the 10-period moving average is going to be one of the demand line 3621. So it's going to try to get back above that level, but so you've seen a couple weeks where we traded below it. We traded down to the 28 handle. PPM 2 is up at a 2.41. So there's a very robust trend. So I expect that we'll stay between the 21 and 10, maybe ultimately getting back above the 10. As you look at the market grid, this is weekly. You're going to be looking at something between 37, 39 on the upside, but it's going to continue. What it looks like, it will continue in this trend, and that trend is moving this thing up and ultimately moving back towards 45, 48 handle as we go forward. The only thing that would change that is if we were to close under that primary demand line. So the under 30.63 is going to be a problem here for that stock. APP Harvest. So Mr. Tater, tell me about this one. What is this thing about? So this is weekly. Here's a daily chart on this, down 770 today. A lot of volatility. So let's, yeah, you got this 10-period moving average down 3.38. So this is a little dangerous. You're probably going to retrace a little bit more, maybe down into this maybe into 18, 17. Probably going to set up a right shoulder and see if it can hold down here. Not a lot there. We go to the weekly. Yeah, same thing. I can't calculate anything. What's the symbol? A. Let me just see if we have this on the platform. We do not have it in there. So that's unfortunate. So, yeah, so not a lot there, but if we just look at it from a market grid standpoint, you're looking at, like I said, probably down into that 17 handle. That's going to be your range. There's some support 2057, 2017. Yeah, you know, we no one mentioned it, but we got to do GME, right? This stock has become interesting, I guess, from the standpoint. Hang on. From a standpoint, it went from a nothing company to a 10 to 14 billion dollar company, and it's stabilizing here. And somebody just mentioned Roaring Kitty, and so on this stock, we still have some extreme upside here. 4.03, 5.5, 3.4. A number of weeks ago when we were trading down here, I remember this big spike. I told you we could actually go up and fill that gap. We're going to go to 200. This little spike the other day, we printed up to 348. This is setting up a dragon head, which if it can stay in this range, stay above the 21 period moving average, there's going to be another run on this stock. You're probably going to see it challenge this 348. The only thing that would take that out is if we close under that 143 level now, but let me just see how much it's going up per. It's going up about $20 per week. So 3 weeks from now, 143 will be 180, 190. So it's going to start to move up and tighten up in this range. So if you use a simple average, if you are trading this thing, but it looks to me it's going to set up a little dragon head here, which means that they just want to challenge that all-time high at 483. You know, the GameStop has gotten a new life, complete new life in the corporate world, because they have lots of money and lots of currency called GME stock, not stop, and they can use that currency to rebuild this company and do anything they want. So they got $10 billion all of a sudden plus. So it's very interesting what's happened to this stock, and we're still trading monster numbers, 15 million shares traded today. So let's go. Let's do NEO. NEO is setting up a bottom here. PPM1 at a plus 0.25. We're up 2.2% here. The 21 period moving average is going to be a pretty stiff resistance right now, 45.99, the high 45.02 today. Sandwich between the 10 and 21, 42 to, we'll call it 46 at the moment. If we can just spend a couple more days in holding the 10, you're going to see PPMs turn up, and you're going to be heading probably for 52 plus on this on a short-term basis. On a weekly basis, just see if there's anything to, yeah, so weekly you have that 21 period moving average, 48.52. That's where this thing wants to go. From there, I think you get some more sideways and maybe backfilling from that level. Yeah, I did cover CGC, I think. I went through that a few minutes ago. I already did this one. We got 53. We got about 2 more minutes. I'll do a quick one on Costco. Costco in a downtrend right now. A lot of resistance at 343 to 357 would be the top end if it was able to rally. It looks like it's going to stay under this 343 level. More consolidation if it can stabilize down here, it's going to take 5 or 6 days for it to do anything interesting. Going to a weekly chart, that is weekly. So that is your intermediate analysis on that. Yeah, here's the VIX bats. I've looked at this before. It's pretty difficult. Let me just see if I can. Yeah, it won't let me slide it off enough to get to zoom in on this thing. So yeah, it doesn't look like much there. Doesn't look like the VIX is ready to explode anytime soon. So that's not much I can help you with there. So we'll do Oracle real quick. Oracle got an RXT weekly sell 2 weeks ago. We're still under the pressure of that. Could head as low as 63. And PPMs are positive, so demand line is 63, call it 63, 65. Just looking at the market grid here, we're looking at 65, S1, 63, S2, 63, 95, 65, 64. So that's probably where you're heading there. What time we got here? 5 minutes. Yeah, they're giving back a lot of this trade here. Let's go over and take a look at the, it's the right page. Yeah, so as we look at this thing here, we printed a high of 83 on the futures, and we're currently trading 69. Kind of at that original spike number, if you remember, is 39.70. So we traded above it. Now we're stabilizing around this number as we're coming into the close with 4 minutes to go. Let me move this out of the way. And yeah, so not a lot of activity. Liquidity's moderate, not really. It doesn't appear to be a lot going on. Kind of operating a little bit of an air pocket here. Got 4 minutes, less than 4 minutes to go. As I always talk about, is that the important part of the day for me is this last 2 minutes and the 2 minutes after, just to get a feel for it, especially after a day where we had a decent reversal. I mean, we traded down to 39.35 today, and then we got as high as 39.83. I want to flop over to this other chart here for a second, and let's just bring up the let's bring up the E-minis on a daily here, just so we can see what the market grid was for today. So the market grid for today, S3 39.33, low 39.35. So we had an S3 and we traded above R2 39.81, high 39.83. So basically S3 R2 for the range for the day. So as we go back and take a look at the final minute and a half or so, we're seeing a little buying coming in here, and we'll see in how this last minute trades. Yeah, I'll do a couple stocks. Yeah, Charlie, I don't know if it's going to hit PLTR is going to hit 14. It's going to have to close under 22.50. We spiked to 20 and change, and then it reversed from there. So we'll see. Yeah, I'll do a couple stocks as soon as the market closes here, and then we'll call it quits. Yeah, not very quiet. Not much going on here at all. 73, 74. So they're bidding it up just a little bit into the close. We're up 1175. The key will be here as soon as we get the closing bell that if there's any selling after the bell, see if anybody has any conviction on laying this thing out. It was actually nice not listening to Powell today. Okay, there's the close. And so we printed up to the high range was 39.75. So what we look for in the next minute or so is if there's any selling coming in, anybody that didn't have a lot of conviction on this reversal might be revealed here. Yeah, 76.25. Yeah, we'll get these marked up. Once I close down this thing, it takes a few minutes for it to show up on our timeline, and then we'll go in and mark up the entire video when I was talking everything I've talked about on this live stream. All right, there's nothing to really talk about. Let's go ahead and do a couple stocks here. There's no action at all. We're just trading very quiet at this range. So let's do a couple things here, and we'll go to, I saw something, UPS is good. That's, you'd think with all the activity and shipping, these guys would be doing a little better. This is daily. Let's go and take a look at weekly. So you can certainly see last July when things came on, what type of surge we got, but it's been stable here. So there's not a lot here. The primary demand line is the 4155.98. That's your value point where you want to try to own this thing. And then you're going to be sandwiched between 155, 160. It's very mixed. Nothing really solid there. Yeah, let's take a look at FedEx. It actually has a little better profile here. We're seeing the PPM starting to turn up, and this one looks pretty good. Had basically a dragon head. It's corrected. Now we're trying to turn it back up, but you're going to have to maintain above the 21 period moving average on FedEx. And gold was covered in great detail, and that'll be on the replay. I would say within 20 minutes we should have the replay, and we'll have everything mocked up. So we'll go from there. Okay. Let's do Disney. Weekly Disney. Still got some very robust. It goes to things that I talked about earlier. The angle of attack of these moving averages are suggesting this thing's going to continue along this line. Primary demand line 177. I know that's $20 from where we're currently trading, but this is we should stay above that line and continue to move higher. Whether or not this stock is peaking or not, it's hard to put that into perspective right now. Yeah, you can see this is all-time high, and on a monthly basis, the trends are still very positive, but this one's kind of sketchy to actually give you any real guidance. If you own it from a while ago, you can continue to own it. You wouldn't want to buy it up here, I would think. So yeah, so here's TLT, and it's just kind of under a lot of pressure. These higher yields, this is going to just keep this thing where it is. It's just really nothing here. I'd stay away from this thing, and maybe let it stabilize. This is monthly I'm looking at, so let me go to weekly. So weekly 200 weeks, so that's a little better perspective, but there's still a lot of downward pressure here, down 1.10, 0.71, and 0.43, so that's quite a bit from that standpoint. Yeah, I see. Hey, Greg Donaldson, we should catch up sometime. So thanks for showing up today. I appreciate it. Yeah, maybe PFE. I'm starting. Yeah, this is weekly. A lot of resistance. 36.23. You think all this government money these guys are getting, that these stocks would be doing better. There's something going on there, I think. I'm not sure. Yeah, there's really nothing. This thing has been since July, this thing has been nothing here at all. Yeah, Walmart, somebody goes, here's the weekly stuff. You can see that, all negative. Let's see let me move this out of the way. And negative 1.03, 1.38, and a positive 40, but this thing is crossing over, so we're probably going to put a little minor low in, but there's still a lot of downward pressure, so this one's going nowhere for a while. By nowhere, meaning that it's not going to be able to get over 138, 140 is going to be a ceiling. Yeah, good call. Jay's telling you to smash the like button, and so just want to tell you folks, we really appreciate everybody coming and spending a lot of time. I know we had quite a few people watching today, so always very grateful for that, to say the least. And you know that's I spend a lot of time developing the community, trying to spend as much time, and these live streams give me an opportunity to do that. A lot of times I wish we were like on a platform where you folks could call in and ask questions. That'd be kind of cool to do. I've looked at a couple platforms. One time we did a Zoom meeting with audio only, and had opportunity to interact with some of you, which was fun. Maybe we can do something like that again. That would be good. Yeah, thanks from Poland. Appreciate that. I know it's at least late in the evening there, so appreciate that. Yeah, you guys are welcome. I'm just gonna do something here, because one of the things that I think is important for the continuation, some people get mad because I actually try to move our platform and our lives forward, but that's what we do here, right? So anyway, I appreciate once again everybody watching and spending the time with us. So thanks again.
Hi, my name is Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over will get you to cash and out of harm's way. It's very simple from here. It's just sign up, click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now, just click the link below.